Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
Hello. Welcome to Macro to Micro Options Power Hour. I'm Samantha LaDuc, founder of LaDucTrading.com, joined by Hans Albrecht. We are going to go over all things, well, not all things really, as much as we can, because there's too much going on. From macro to micro and a manic market. You're going to be gone next week, Hans. You're also going to visit some friends out of state, out of country, and so therefore we're not going to be here next Wednesday. So let's make sure we get everyone's questions in. Hit us up in Zoom Q&A. This is an Ask Us Anything kind of thing. And right now we kind of go over market thoughts and then some sector rotation themes, stocks, of course, some options education, and your answers. So it's kind of a breathless market. I kind of wrote up, in fact, for clients today, I call it the suspended disbelief, the market of, what's going on with on again, off again tariffs, what's going on, all these Trump headlines of making 51st state, either Canada, Greenland, or now Gaza. It's very distracting, but at the same point, the market really has functioned as we expected, which is during earnings season to have this kind of clench. We've gone nowhere since the election. We had a big bump, but literally in 3 months, we've had big swaths of volatility within basically what I would call channel surfing. So we really have not broken out or broken down. We have just had some wild intraday, overnight volatility, and then of course the headline risk, which makes intraday trading just a little bit treacherous. We are doing well as it relates to macro themes that I've got going on with higher bonds and yen and gold. You've been crushing it with your hood, and you've got some other trades that you have not only protected into earnings, like for example, Amazon's coming up tomorrow, and I know that's a position of yours. Basically, we're kind of waiting for some economic data to push us out of this still suspended market. And we could get that on Friday. Besant, new Treasury Secretary, did nothing today. Literally kicked the can for the next few quarters, in fact, which is good because Doge right now and the operational efficiency monster that is new government policy is in fact going to be very disruptive. So we're kind of it seems like he's going to let that kind of play its hand a little bit before we get into some Treasury issuance that is longer duration notes and bonds versus the shorter duration T-bills. So right now we do not have the added liquidity. Bonds have gotten supported, and that is by its nature better collateral. So long story short, on a macro standpoint, I am focused on dollar and yields falling, yen and bonds moving higher, and we're basically now going to wait and see if we can get some rotation here into the market after Mag 7 finishes reporting, and that won't be until the end of literally February. So it's going to be a choppy period until OPEX. What's your read on the market, Hans, and what are you looking at for what's next?
Well, I was a little worried. I had this trip planned to go to the US, and then President Trump had to sort of throw a grenade into that, and I thought, boy, I'm in trouble. Am I going to even be able to get across the border as a Canadian? Am I welcome? So, at that point, we were starting to kind of, mobilize the forces, and we had our maple syrup catapults lined up along the border there. We were there with our hockey sticks, right? You guys have pitchforks, we have hockey sticks, and we were ready to really get into it and drop the gloves, and then it just ended as quickly as it began. So it was sort of, I was getting a little bit excited. Alas, it really was another chapter of the art of the deal, right? Which is just coming in guns a-blazing and then kind of, dialing it back and wanting to do a deal. So that's good. And I think the market has a little bit wise to that. And so, like you said, we sort of had this clench, almost a little bit of an unclench followed by a reclench, because we've had these big moves, particularly in single name. And so that's one of the things that I can sort of show you guys today, is that we've had this sort of dispersion trade, which is effectively your classical sort of vol dispersion trade is really selling index vol and buying single name, right? So you're kind of short one, you kind of see the opportunity as being the single names being very tradable. So you really want them to move around. So this has actually been a very, very good trade. A lot of desks that have had this on, which is basically the index, like you said, not really doing a whole lot. It's kind of swinging around that 6,000 level like it's a tetherball kind of pole, but under the surface, we have these moving parts happening, of course, in big part because of tariffs, because of the whole CapEx question. And I think the reason that we've sort of stabilized quite a bit is because that CapEx question is being answered to some extent by big cap commentary, right? So a number of big companies have come out and said, listen, we're going to keep spending. People have maybe expected the Googles and the Metas to sort of go, well, wait a minute, hold on, can I do this for less money? And they're saying, no, this is not to mention that the whole DeepSeek thing was probably, to some extent, a bunch of BS. They obviously, we talked about this last week. They for sure had to spend a whole lot more, and that was just sort of that top layer.
Wait a minute, what's BS? The DeepSeek or the reaction to it?
The money spent on it, right? Not the reaction. I think I think it was kind of a wake up call in a way, because we've been sort of thinking about when is this sort of CapEx explosion going to sort of unravel a little bit. And by the looks of things, it isn't going to anytime soon. But the idea that you can do everything you want to do for $6.6 million is probably far-fetched, to say the least. So I think the big cap names kind of came out and said, no, we're still doing okay. And NVIDIA on the backs of Google partially, firmed up a little bit today. I will say that I think, for a sector that was really kind of the golden child of the market for a year and a half has been maybe injured a little bit. There's this question that, well, maybe we can work around, for example, with CUDA, with NVIDIA, they sort of found this workaround. And I think high cost, when people are sort of pushed to the wall, either for cost reasons or other reasons, they will find a way to get things done. And I think DeepSeek is maybe a little bit of a warning that, look, things are going to get done. I mean, it was China. That's a big problem there, number one. But people are going to find a way to accomplish things for less money, for maybe a little bit less of an investment in the long run. And I think that could be very positive from two perspectives. Number one, it's going to push American companies to really just kind of work harder, right? It's easy to kind of rest on, sit back and go, wow, we've really done a great job, haven't we? And we're making all this money. So, a little bit of a warning there. And then secondarily, the rest of the market, I think what people realize is that the rest of the markets, the economy is going to do well, cheaper, more accessible. AI, for everybody is probably a positive thing. So this idea that if you can just improve every little things by 0.5%, 1% here and there is potentially a positive thing. So overall, add that to some of the other stuff that I always talk about, which is good economy and employment being great and people spending money. I mean, at least the upper half of the population is spending money like they haven't got a worry in the world. That sort of probably keeps margins okay, which is, I think, the bigger thing that markets are going to latch onto in the long run. And I'm sure you're going to have some other ideas there, Samantha, because you're always looking at the other side of the coin, just
Always.
to make sure.
Yes, I am. This is very true. So I have, just to get the macro kind of off my chest, I really am on the other side of that trade, which means big picture, I think this is actually kind of shot across the bow from China to challenge our U.S. tech dominance. I actually think it's a big honkin' deal. So I'm not so focused on the tech per se or how much they spent. I think that's the noise that distracts from the signal, because we aren't changing the investor appetite for big tech yet, but it definitely created a very big wake-up call for investors. We could see from the 17% drop in NVIDIA that one day, and semis really haven't been doing well for 6 months. But the whole point is we have got, I think, a very big threat that is more economic warfare using this open and free tech, which is the opposite, by the way, of open AI. It's completely closed and for fee. So really, I think they're doing a great job of forcing us to kind of pay attention, us, meaning US, faster, cheaper, better. But I don't think it's necessarily, I think it's spun as very bullish. Right. And of course, I think Mag 7 is going to be in this incredible, powerful position to say, oh, that's just going to make us even more growthier. But I don't trust it. So that's me. I also have been on this bent, and recession risk. I've been on since June of last year. I see it for the end of 2025, regardless of who, got elected to president, and it's getting closer and closer, even with all the harried firings or letting go, reduction of headcount and tariffs and all those things. So nothing has changed. So big picture, I think this is a really good time to be in select stocks, good stock picking. Zoom out from the intraday and the overnight headline risk. absolutely pick themes that are working. We did move from chips to cloud. We still are in a SaaS reacceleration phase with certain names that we've been really pinpointing since October, late September, more mid-October of last year, and they're still working. But I am not at all complacent. I'm looking for yen carry trade Unwind part 2. And in fact, I wrote about this a month ago for signs to look for. It was not a risk a month ago. I literally said, be on the lookout. When we start to have yields fall with dollar, with oil, that's the time to start looking for the carry trade unwind for yen moving higher. So all we've had so far is a bounce, right? That well-timed, a bond bounce on January 14th. It's just a bounce. However, we're getting to a point where we're going to get close to inflection point that if yields and oil continue to drop, we're going to get into a risk off deflation impulse, which will be risk off. So I'm always looking at that kind of that hairy edge that we go close to, don't quite fall over, because right now we're clenched, right, in post-election earnings and also escalation, right? I mean, Trump isn't just standing on his laurels here with tariffs. He has followed through with the 10% in addition to the 10% that he did during his first term. So he actually went up 10%, and then the Biden administration never canceled those, and now we're going to go up another 10%. It's still manageable as it relates to currency, which is the yuan devaluation to kind of compensate for that tariff hit. And I've written about this a lot, but I actually think we've turned a big reversal here as it relates to currencies. The loonie, euro, yen, yuan. I think we're going to have what we haven't had, which is FX volatility seeps in to equity volatility. So I wrote about it a month ago because I'm looking for it. Now we're getting closer to the edge. We're not there yet. We haven't gone over the edge. What happens this Friday if, for example, we do get a non-farm payroll that shows a bigger revision than the market is anticipating? In other words, the labor market was weaker than expected. So those who are consensus that the economy has been running very nicely, and that coordinated effort of Biden, Fed, and Yellen, by the way, very coordinated. We don't have that now. we have Trump and Bessent, but not Powell. They're not coordinated. They're not on the same page. So what happens if we get weakness showing up in all of these reports moving forward? It's going to be a different two-way market. So it's going to be much more volatile.
Don't they, Samantha? They always revise those numbers.
But it's a little bit different. Sometimes they change the methodology, but sometimes they also kind of dig up the dirt and bring it up to the surface. The market doesn't know what to expect. I have no idea. I'm not talking conspiracy here. I'm talking they are announcing that they have new methodology, but we also have the hit from natural disasters, from Helene to California fires to the new layoffs in the government, which again, percentage-wise, we need more to really move the needle to 4.5% unemployment rate, to move the needle on jobless claims, which I track. So we're not close. We're not there yet. My point is we're getting more of the triggers that will get us there. And I think that will be very interesting to see what happens to that narrative once we actually do start getting weakening economic data. And we'll have the first real test this Friday.
And it can happen very quickly. I think we got a pretty good taste of that last couple of weeks, even though the S&P overall hasn't done much. There was one day there where I had an iron condor on, and it was absolutely at the upper edge of being threatened at around 6,100, when we were around 6,100. And then of course the Trump, tariff rumors started coming in, and of course we dropped 200 points in a quick sequence there over probably half a day. So it can happen very, very quickly. So just when you kind of feel like we're about to make all-time highs again, it really feels like it's almost, even though it isn't a short gamma environment, it feels very short gamma-ish. Like we're sort of in a kind of richish environment. Let me show you something here.
Yeah, hold on.
Fancy slides here. So we kind of have this fairly rich sort of gamma environment here, but I'll tell you, it certainly didn't feel like it as we swung between 6,100 and 5,900 quite quickly, back and forth, back and forth. It feels almost short gamma-ish. And so I think it's just another lesson that things can reverse very, very quickly. We didn't really get a confirmation from the VIX. We dipped into the 14s just very, very briefly, but a market hitting all-time highs, typically you're going to see a VIX a little bit lower. Now, arguably, we are in a different kind of VIX environment. We've been talking a little bit about that over the last 6 months. We've seen very high beta to S&P down moves. We've seen that VIX really react very, very quickly. We've been in the 99th percentile beta-wise at times. That has come down a little bit, but very skittish market and very much a trader's market. So I think as we sort of approach that 6,100 spot again, I think, probably getting into some upside VIX call spread, something that they're not cheap. Things like that can kind of be something to play. That's not going to be your full crash protection or anything like that, but I think there's a little bit of alpha to be grabbed in there. And I think you could even finance it with sort of something like a short 15 put. You're not going to be getting a ton of premium for something like that. But remember, and some people get confused, they look at the VIX 50 and they go, why are you selling a 35-cent put on the VIX, Hans, when the VIX is trading at 1580? That just seems a little too close. And I say, well, no, that's trading off the future. The future is quite a bit higher than the VIX, depending on what month you're picking. So it won't look as good as it actually is, but that might be a way to kind of play. So I think it remains kind of a trader's market for now. It's not a cheap market. I'm gonna agree with you. This is not an inexpensive market. I think the glass tends to be half full. You can kind of see that, these shocks kind of push the market down, and then it just kind of sort of claws its way back. There's almost this kind of embedded buying power in there. And you can kind of see, you've got these, sometimes I like to talk about these funds, these vol targeting funds that are buying into the market. So if I show you this chart here, you can see 1 month versus 3 month realized volatility. So realized volatility, folks, just means movement. That's just recording what has been happening over the last little while. And you can see that red line is the 1 month, and it is coming down. The 3 month is still a little bit elevated because of what we've been experiencing. But as long as you see that underlying movement in markets generally come down from a sort of overall market perspective, I'm not talking about individual names like a Palantir or something, but as long as the overall market is kind of calming down, generally speaking, from close to close, then we're going to see these flows continue to come back into the market. So calm is a situation where buying begets more buying, and just as it can go the other way when you get into a difficult situation, a difficult kind of market. These kinds of funds and the other things that we talk about, leverage funds, inverse funds, all of these things are kind of synthetic gamma. They have to sell into sell-offs, and so things can get ugly to the downside. But when things start to get calm, they start to reallocate to markets. And I think right now, last time we talked about it, they were about 40% reallocated. So that means they're upping their exposure, getting back into the market as things calm down. Right now, I believe they're they're actually up to around 60%, but there's still a little bit of room to go. So it's kind of always interesting to talk about these things where the sheer absence of movement can actually mean more buying come into markets. And that's really just a part of our new regime, right? We just have all these kinds of instruments that are kind of pushing and pulling. We talk about the dog and the tail, which one is which. This is our new reality.
And then we also have still solid speculation coming into certain plays. I mean, Palantir did earnings, yesterday, and a $39 million beat moved 39 billion in market cap. It was like crazy explosive. So there are still moves that are having a big effect on the speculative, fervor. So this individual play is great. But for the ones who are trying to position for the next move that you're talking about, as far as hedge funds, because it's quote unquote calmer for them on a VIX spectrum, where are they positioning though? I mean, as it relates to market move, we have the JP Morgan collar of 61.55 for Q1, March 31st. Do you see anything up and above that level if and when we can get up and above that level?
If anything, we're seeing that right tail kind of a little bit disregarded again. So, people aren't really clamoring too much for that upside. There isn't a lot of positive gamma beyond a certain point, but to the upside, what you tend to get is sort of a replenishing. So when the market does get up there, you're going to see that whole, we call it the VRP crowd, that volatility risk premium crowd, these funds that go, hey, wow, this is great. We have our stocks stocks are going up. We're going to sell some calls into these moves, and we're going to try to generate a little bit of yield. So that's kind of what you see here. You see this single name vol. I was talking about this earlier. That single name realized volatility really being kind of off the charts. So there's some concern that if you do get that single name volatility coming down, which it will tend to do over time, you could get a need to cover the other side of that dispersion trade, which is buying that index vol, so that could cause a little bit of disruption and probably keep the VIX sort of floored in there. So that's another reason I sort of don't mind those VIX plays, is I think that floor is fairly firm. There are, of course, no guarantees, but it just feels like VIX 15 is the new VIX 12 kind of situation where, and maybe that's just part of our new reality as well, right? We're in a new regime. These aren't QE times anymore. These are different times. We have high interest rates. We have a bit of inflation, and so it's, in a sense, it's a normalization in a way, because this, historically, this isn't that unusual of a situation. So lots of very interesting things happening, but a little bit, people don't seem to have as much FOMO at this point. That could change, of course, if we get through 6,100.
Well, NVIDIA has fallen from 153 to 113. So until we can get the leaders back leading, it feels a little bit pensive, lack of a better word.
Microsoft
there really
too,
isn't.
exactly.
Exactly. Yeah. So there isn't really the AI excitement as much, and there shouldn't be really. There is definitely a come to Jesus kind of a talk with a lot of investors right now on that DeepSeek hit. But what are you playing? Like, look, what are some of the single names, since we're both in agreement the markets are in a sideways chop, which is big swaths, basically channel surfing. As it relates to macro, we've talked about this gold trade. I did that whole thing last week as a review. We still have the soft commodities. We have precious metals, and industrial metals typically follow. So far, they really haven't gotten up off the ground. But for right now, that move is going to be tested likely very soon on non-farm payrolls, or potential continuation with the bond and the yen bid. This has already fallen. The 10-year has already fallen into price target that I had given for this bond bounce. So now we're really at a testing point for me. I got them from here, from there to here, and now I'm really curious what's going to happen next. But let's get into some kind of single stock issues, and then I have a question on my yield curve chart that I used as a timing tool for that bond and yen and gold move. So I want to update that because I was asked on Twitter to do so. But what are some of your individual trades that you are still in? I see Netflix.
Yeah, so I've been sticking with I've been trading VST, which is that Texas utility power, some uranium. It's been, I think, in the power gen basket, it's really been kind of the top performer, one of the two top performers, Vistra. So I've been playing that. That thing went from 180 when we had the big hiccup there on the DeepSeek, which, by the way, I don't know if anybody remembers this, but 2016, when we talk about this sort of China-US back and forth, they're sparring quite nicely here. I didn't realize this until a moment ago, but in 2016, Google had something called DeepMind. I don't know if you remember, but DeepMind figured out how to beat the best Go players in the world. And so Go is this Chinese sort of checkers game. I've never played it, so excuse me, I don't know much about it. But apparently it has more potential positions on the board than there are like atoms in the universe, some outrageous sort of statistic like that. And it came out and it was starting to beat these players. And that was a moment where China went, whoa, you accomplished what? You beat us at our own game. And so funny that DeepSeek comes out to kind of one up DeepMind all these years later. So I think we're just going to continue to get this kind of back and forth thing between the two. So anyway, so when we had that big sell off, the power gen names sold off, and I thought, well, this, if anything, this is positive for power generation. I mean, more AI for everybody means that's probably still a good theme to be in. So we were selling some put spreads, put verticals, credit spreads in VST. And then the fun part has been we've been sort of playing it back and forth. So sold a put spread after it came down $50, almost picked the bottom. You don't usually get that lucky, but within $5. Bounced back, it bounced back. Then the nice thing about a put spread is you have a piece that you can play with. So when the stock bounced back to around 170 from about 140, I bought back the short call leg of it. And with a put vertical, with a bull put vertical, you have a short put and you have a long put to protect it. So then I just went long I just stayed long the long put. Then it came down again. and I resold the short put. And so people were sort of asking me, well, what are you doing there? And I said, well, one nice thing is when markets are a little bit more volatile, I don't mind being short some options because I'm trying to harvest those higher levels of implied volatility. I mean, I don't want to be the guy selling house insurance into an oncoming hurricane, but once I feel that there's a bit of stability there and that I'm not just kind of recklessly running into a burning house, I will start to pick my spots. But I also like to spread it out. So in a lower vol, kind of mid, not extremely low vol environment, but in a kind of mid-range to low volatility environment, let's say like a VIX 15, 16, 14 and a half, I'd like to put on spreads a little bit more because one thing you can benefit from is movement. I mean, by definition, the market is moving around a little bit, and it's nice to have that long, what we call long gamma piece. When you're short options, purely short, you're short gamma. So you're not liking a lot of movement. So the nice thing about a put vertical is you have that little piece of long gamma via that long put, and you can kind of play around with that as the market swings back and forth. So you can kind of add a little bit of value to that trade if you trade it well. You can turn that into a ham sandwich as well if you screw it up. But it gives you a little bit of a piece to kind of play with up and down. So we've been having a little bit of fun there. My hood trade as well. I had a couple of them. I took one off and I still have one, but I did roll up the long strike. So I was financing an upside call spread, but thankfully I did keep part of that. So I'm considering just kind of carrying that. And I think they're going to knock it out of the park. I think this company is fantastic. Yes, it's doubled since the election, but I think and if it comes off, I will look for a way to kind of grab a little more. But I like that. I like just stories that make sense to me. Netflix can do no wrong. Look at the Disney subscribers. They actually lost subscribers, I think. I think they had some bad subscriber number. I mean,
They
you just
lost
can't touch.
700,000.
They lost? Yeah.
Disney lost 700,000 subscribers.
Yeah, and that's really the big competitor. So I just think that's a name, albeit very expensive. It's a name where I've kind of we talked about it last time. I did kind of this cash machine trade where I was long Netflix, short some in the money calls. I grabbed around $35 of time value. So you can think of this as almost like being kind of short and out of the money put, but you're using long stock and short calls and basically a cover call in order to grab that time value. So no matter how high Netflix gets, I'm going to just reap the benefit of that embedded time value that basically has to disappear by expiry. So I grabbed $35 in time value. The stock has gone up about $25 or $30 at this point, and now they're down to 20. So you can always at this point, once the time value seeps out of it, you can either close it, or what you could do is you could go in now and pick up like a 900 put, a 905 put, and then that'll take off some of the margin pressure on that position because, of course, trading something like Netflix at $1,000 is very, very expensive. Even a one lot is going to cost you a fortune.
Approaching a level of warning for me. I see, we talked about this, 1035, 1050, and I think we're going to have some volatility enter that name. So the problem for me is that the mean of Netflix, and the trend has done nothing wrong, but the mean is down to 800. So if you, and that's hard to protect all the way down from 1050 down to 800. It's a little bit more problematic to protect. That's what I see. I see we're going to get some volatility into that name pretty soon.
And it can do it. I mean, last time we hit about 900 and we got down to almost 800. So it does have the ability to pull back a good 10 to 15%. There's no question about it. Right now, I like the trade because sometimes I see these big gaps and the news is so good and everybody's sort of looking at that downside and going, well, we have to give some of that back. And I've been doing this long enough that I feel in many cases that it's just going to stay bid for some time. So this is not, to your point, this is not a trade I'm going to roll into April. I'm going to take my money and run at some point and then take a look and reevaluate, because I think you're right. There's no question. There's a little bit of risk there. It's the kind of, I'd love to see a pullback on it because I think I think ultimately it's going quite a bit higher, but it has had an unbelievable run. I mean, I recommended this at $225 a couple of years ago, and more than a couple of years ago now. And I didn't not own it all the way up, but it is an expensive stock. So we're doing that. So the energy play again, CCJ not really cooperating very much. My Uber trade is just sort of destroying my will to live a little bit here. Uber down to 65
There's
bucks.
always one. There's always one.
The ones you love hurt you the most. That's right. You said it. So what I've done is I had some cover calls. And so this is a situation where, I had a member ask me the other day, and they have a difficult position. They said, well, what should I do? What should I do? And I can tell sometimes that a student or a client is sort of saying, how can I turn this bad situation into a profit? And I say, well, listen, sometimes turning a bad situation into a smaller loss is actually the win. You cannot always turn a good situation into a big positive. So I said, look, sometimes you got to play defensively, and you have to really face what's in front of you and accept it, right? There's that word acceptance sometimes as a trader, maybe as an investor as well. And so I rolled down my calls today, and I said, you know what? I'm going to sell out some at the money calls. I'm going to defend this position aggressively now and try to generate a bit. I don't want to pull the ripcord on the position entirely, because I do think it is not an expensive stock, but it is an area, especially on the chart, fundamentally, where it needs to be defended. So I think it's one of those just kind of face the music kind of situations. I like things like Goldman, some of the with Trump, I think that's an area that can probably still do okay. I think this year we see some good deal flow. I think we see some IPOs. I think we see things that are generally good for some areas of that sector. And then things like Reddit, which are a little bonkers at this point. I didn't even realize at 21. I first started talking about that at 114, and it's just gone crazy. But I think it could be a $400 or $500 stock at some point. But earnings coming up, very important.
No
to
way.
see.
Yeah.
We
How
have
are
to
you doing?
see if-
Are you doing
Sorry, go
anything with
ahead.
Amazon? Speaking of earnings tomorrow?
Amazon, I'm short the July 195 put and long the 230, 250 call spread. A little bit of money on it right now. And I was kind of looking at that today, talking about it with somebody else, potentially considering picking up just maybe a put somewhere just to kind of protect that downside, just in case. I think they're only expecting about $15 in terms of the expected move. Now, that doesn't necessarily mean that's what it's going to move, but I'm okay with this thing moving down 15 and still being involved, but I think the number is going to be good. So I'm not super worried. I could roll up the position. So I could take the 230, 250 structure and roll it up to a 250, 270 kind of thing. So just kind of, maybe take a little bit of profit, take a little bit of risk off the sheets, and reposition that a little bit higher for that thing. But I don't think they're expecting anything too crazy on this stock. Now it's run from 180, so it may have a similar problem to Google, where they're what do you think? Are they pricing in a little bit of perfection here?
Well, the Amazon you're talking about, it's been a gorgeous swing long. There's nothing it has done wrong. The only problem, of course, is this de minimis restriction, that exemption that's likely to be removed on inbound packages from China and Hong Kong under $800 that escaped customs. Now they won't, although that's an on again, off again headline. It will hit the retail players of Temu, which is PDD, and Amazon to a degree, but Amazon's so much more diversified, and AWS and the rest. So it's still big moat and expected to do well, and the chart hasn't done anything wrong. So I'm not so worried about it. Little shake and bake wouldn't surprise me, but big surprising numbers to the downside, I'm not expecting. I still think a lot of this, though, is the market reaction. So, you're seeing some beats that are getting sold, and then you're seeing those who are missing that are getting sold hard. So I think it's the investor sentiment right now that is, like we showed the NVIDIA selling last time on Wednesday. I said, they're not done selling this thing. And I showed you some of the really large trades where they're getting out, they're lightening up, they're whatever. And then my price target was that 113, and it hit. And it bounced, it's almost 125, but that doesn't mean it's done. It just means that that's a really great place to defend NVIDIA. But for the most part, I think the market is just waiting for some of this drama to abate as it relates to the political headlines that are obviously, policies dictate price. And this volatility, which is gripping the overnight because of all the earnings and, just policy headline risk. So I don't think there's a smooth direction out of this yet until we get out of earnings season, honestly. So right now, let me just kind of show a little bit of stuff that I was talking about in regards to what seems to be still the biggest trade, which is this gold move. I'm looking at a weekly here, but we're now approaching kind of a fib level up here. So I think selling 270 calls is a really good idea. This was one that we've been talking about for a while. It looked fabulous. It's still fabulous, but the fact that this is moving so aggressively higher, getting a little above its skis right now, selling calls makes a really good idea. The reason I'm bringing up TLT is just because that's the one that we talked about, right? Which did in fact gap up and it has continued higher. This is exactly where I expected it, but you kind of see this inverse head and shoulder pattern. Or for those who play ZN, I could bring it up, but I've already marked it up. This is the 10-year T-note futures. You can also kind of see that inverse head and shoulder pattern. It has come into the price target as it relates to a bounce in bonds or a pullback in the 10-year yield that has corresponded not only with that driving higher gold move, but also yen. So now what we do here matters, I think, and this is where I'm kind of focused. The other thing that has been related is this yield curve, 10 and 2 year, which was what I was asked to review, because back here on the September 18th, and then again, I'll do it right here, September 18th, hopefully you can see that. And then again, December 12th is when I said to clients, prepare for a yield spike. This is not showing you the 10-year yield itself, but in both of those instances, we've moved very strongly higher. And then we got up here, this is a flattener. So this is a bear steepener, and this is helping that kind of whole yield move higher. At the same time, the market starts to get a little wobbly because dollar and yields are moving together. The market's a little wobbly. And then we get this pullback, which is the flattener, and it's pulling back into support. I actually would not be surprised if it comes down even a little bit more, which would be in this kind of neck of the woods. And let's see if this then starts to balance out and start to move higher. This is the day, this is the weekly, and so you can see there is definitely a reversal here. It hasn't confirmed and broken down. This could flatten more. Point is, I think we're getting into we need another few weeks before I can really see this thing go sideways to higher. So it's not time. As this goes higher above 45 basis points, that's when we get a little bit more shake and shimmy in equities that I think would be more volatility producing. So as that steepener, it's not right now, it's flattening. As it gets above this right here, this is where I would expect it to move higher and create even more volatility. So long story short, we're not there yet, but this is what I'm watching. We definitely have a tag-your-it type of event where the bonds are moving right into price target with yields pulling down and oil pulling down, which is also helping that yen carry trade kind of vibe, but it hasn't triggered yet. So that's the worry that we have for equities right now. And then of course, this growth value rotation, which I know is really, really messy, but long story short, growth has been coming down and value has been supported. I don't mean small caps Russell per se, but you can look at anything that is not tech as a theme that has been doing better than growth. RSP over SPY, for example, which is equal weight over, the cap weighted. So this is just a ratio that kind of shows direction. When it's moving very strongly higher, this is your NVIDIA, oh my God, move and semis. And then when it peaks and starts to come back down, by the way, this is the yen carry trade unwind. It happened to trigger. But the point is you've got growth that moves higher and then value takes over relative to growth. So right now we're still kind of softening down into this area that I'm still expecting, which is 2.05. I'm not bullish growth until I can see what it can do there. So I'm just letting the market soften and come down, picking my spots on particular plays that haven't done anything wrong, and then just waiting until we can see what happens at this ratio, because if it breaks this 2.05, this growth value, it means volatility. It means neither growth nor value is in vogue. So we're going to have some selling.
You got it. Well, and that's what that's what I've been sort of focusing on too. Things like Home Depot, like real things. I mean, Visa's been really good. I mean, we think of the big techs as sort of the cash flow kings, but a company like that, some of these cannibal stocks, there's some great quality stocks out there. So I tell people, well, don't focus too much. Don't keep trying to pick the bottom in AMD. You'll have your soul just drain out of you if you try to do that over and over and over again. There's so many great stocks to trade out there. Keep that rotation into things that are working, and we will get our chance again. I was a little bit negative on
my 270, 246 on SMH. We came close. We hit 270, but we didn't hit, the the actual
Not quite, but I
not
love your
quite.
resolve on that, Samantha. Man, you are
Got all of
just
Q1.
yeah, it'll happen eventually. I have a position, a
Oh, and
financed
let me talk
upside
about
position.
China. Before we forget, I need to show you some option activity in China that is very, very
Okay.
bullish, expecting a
Now, I was
parabola.
just going to say,
We
I have a
revisit this.
position, so it's going against me a little bit on Nvidia, and I have a few people who've asked me about theirs, and I said, well, I think it's going to have a little trouble getting through that 130 level. And what you can do is I wouldn't be averse to just kind of collaring it out there. I picked up some downside puts, fab. Then when it dipped, I sold some further output, so I turned it into an inexpensive put spread. Kind of have that on the go, a little bit of a downside fly as well. I think that's an area where don't force it. Don't keep forcing something that isn't working well. It will tell us, kind of the chart that you're showing there.
Oh,
Those things will tell us when it's ready to.
But yes, I agree. This is the wait, and it's the market in disbelief, suspension, whatever. This is really not anything to press strong. I mean, you and I have had our transition periods where we're kind of like bullish or bearish, and right now this is just wait. It'll break out and it will confirm. It'll be beautiful. Palantir already hit my 100, which was for Q1. I'm waiting. I mean, obviously there is sluggishness because of DeepSeek and the whole AI CapEx drama, but we will potentially get some policy from Trump that comes in and tries to close the borders kind of thing, and then it'll get backstopped again. So we're looking for policy intervention always, but I'm not really very excited about the market right here. I'm excited to see what happens with this 180 days of Trump coming in and getting done all of these policies. Then we know what the end game is. Then we know how to trade it. It seems like a long time to wait. We can't wait 6 months. But unfortunately, this is the chaotic point where we had a very smooth, predictable market because we had White House, Treasury, and Fed all in alignment. We obviously do have the exact opposite, and it's very hard to have a durable theme. Gold is good. We're definitely having a dollar that they want to pull down. In other words, they want less demand of the dollar to help exporters. So real companies over speculative. And yet, having said that, Palantir, market cap is bigger than Raytheon, Northrop, and you name it.
Highest price to sales
Right.
by far in the S&P. Yeah.
Yeah. So it is a little stupid with the FOMO that is very concentrated. That was AI. Well, that was the chips, then AI, nuclear renaissances, data centers. They're all right now in a period of digestion. So I don't think there's a real good theme here to press except patience.
Yeah, and keep it small. And like if you get out of some Palantir, if you're going to keep some upside, just keep it small. If you've made 10 grand on it, risk 2 grand. If play further upside. Okay, so let's talk about the China stocks.
Yes, let's
and then
do.
I'm going to show people something.
Yeah, let me just show folks that real quick. So first and foremost, you were just asking about Nvidia, and clients know because I posted this repeatedly that a much, much, much better place for a defense is down here at the 50-week. And so sure enough, it tagged that 131, which is what I posted, and we had a sizable bounce all the way into what I have is a 125. But then I think it's just going to be in a chop zone. So that's it. All we have is a bounce. But what I wanted to show you with some of the K-Web plays, FXI and the rest, not today so much because they're opening up tonight. And that translates into all the Chinese ADR chasing that we've had. There's a NAV differential. And so they're going to get hit, and they already started to get hit. For example, K-Web right here, and also FXI and, BABA. And all of that was expected. In other words, they were closed for a week. We ran it hot on expected tariff of Xi and Trump talking. They didn't on tariffs. All of that back and forth. It doesn't matter. Right now, it's still, for me, a March outlook. I've been talking about that. This is when I think it starts to get over the wall. And what do I mean by over the wall? I'm talking about this big, beautiful chart that is the Shanghai. And I don't have any updated price because this is January 27th and they open tonight. This is when we want to be excited. It's when it gets above this month-long digestion and it stays above. But in expecting that that's going to be a potential, I've noticed some very, very large, like look at FXI down here. You've got some February, but you also have some June bull risk reversals that are coming in and some financed call spreads that are coming in. And these things are positioning for, I've noticed it the past few days, right? Even while the market is closed, they are positioning turning bullish for March and June. That's where I'm seeing the concentration of very strong out of the money type of call spreads and financed call spreads in anticipation of a parabola potential. But it's size, it's not little. So they're actually doing something about this look that I keep showing, which is getting over the wall, long story short. So that's now what are you looking at?
Yeah, so let me look at BABA. Yeah, I held on to my BABA all the way from 80. Now I've been selling some calls against it, kind of trying to lock in a bit of those gains. So at the 100 level, March 100s, March 110. So grabbing a little bit there. The calls have gotten a little bit pricey. So if we look at, this is something that I like to look at, your skew effectively, right? So we have this sort of fairly steep skew in BABA, kind of see where it tends to trade. Generally, the calls tend to be a little bit more expensive than the puts. So this is not your normal kind of skew on an equity. They've gotten a little bit on the expensive side. So I've been happy to kind of feed them a bit. There's an old saying, when ducks quack, feed them. So we say it on the floor. So they're coming after calls. Great. You can have some here. I think it's had a good run into the BABA, basically selling some downside, doing some finance spreads around 92, 94, 88. And so that's how I kind of got stocked up on BABA a little bit. So nice to see it come back. And now I'm trying to turn that into kind of almost a wheel type strategy, right? You sell puts, you get the stock premium, you only do it on stocks that you believe in, that are relatively inexpensive, that have some promising qualities, and then you kind of look for spots. You don't just sell like in the title of the webinar. Don't just sell calls just because something's going up, but look for your spots, pick a trend line, pick a spot where, like your chart there on Shanghai. So we'll see. That's a good question, Samantha. I wonder if we're going to see some follow through, because they've been quite excited about.
Your audio keeps cutting out, but yes, we'll see after this week, more likely once we get some definition around the tariffs, and that could take another few weeks. So again, this is a whole kind of talk about patience. We need to see what economic data is really going to look like. We get a good test of that on Friday. We got a good kick the can response from Treasury Secretary Bessent as it relates to the composition of the QRA, the quarterly refunding announcement. So that's a risk that's been removed as it relates to a near-term liquidity risk. Bonds have been bid with yen, oil falling. That's always a big, no-no in my mind as it relates to potential equity de-risking and volatility, which we're waiting for the edge to drop off, or we get some really nice relief rallies here in play, but earnings aren't going to be the trigger. It's going to be macro. So unfortunately, we've got more of, I would say, unpleasant choppiness ahead, and there really isn't a clear view. I don't have any way all the way through March expiration. I just think that this is going to be kind of the nature of the beast that we're in until we get a lot of these directives out of the way and known, and a few more data points put together so the market can decide what it wants to do. Big picture, we're posting all of our stuff, just so, for those who don't know, we're posting our stuff in live trading room notes, in our Slack channels for members. We've got a team of 10. Hans is constantly looking at the best individual trading plays and helping clients to also collar their portfolio positions, especially during earnings season, which can be chaotic and dangerous. But for the most part, besides kind of the positioning of individual trades and helping clients, you're also teaching options. So for those who want to understand more about this kind of volatility skew and the way that he looks at when to buy, when to sell, and where, and kind of like some of the psychology around it as well and defending around it, definitely check out LaDucTrading.com/Hans. He offers a program there that is very, very helpful, especially to LaDuc Trading clients, because they're deploying these tactics as part of their trading and investing ecosystem. So I definitely want to just kind of remind folks, because I forgot to do that at the very beginning, LaDucTrading.com Hans for more option education and mentoring. But otherwise, I don't have anything else to report on this market. I really I see it. And right now it's suspended disbelief. They don't really know what's coming next or what to believe. I think we'll have a much better play directionally after we get through earnings.
Yeah. That's no terrific, and thank you for the mention. I think that the whole volatility world is just a little bit of extra insight into behavior for me. It's all about sentiment and behavior, and how is the market? What is the sort of personality of the market? And so when you get into sort of option skew, and you can look at term structure, and you can just sort of look at different things, levels of option pricing, and you can really sort of gather more information that of course you begin to gather when you look at charts and fundamentals and things like that. So it's just really becoming a complete trader, a complete investor, and really using all the tools that are out there. Of course, there's gamma as well. We talk about gamma and spot gamma and things like that. So there are all kinds of great tools out there to really help us to become a complete investor. And one of the things that I often hear from students by the end of a program is they just say, I just have more confidence. I knew about this and that, and I did a little bit of this and that, but if you don't have the confidence, you really can never lean in wholeheartedly into something. And so it really is all about just kind of building that confidence and becoming better at what you're doing. So hopefully that helps folks.
And sometimes just being patient.
Yeah. And sitting on your hands. You're 100% right. I that's one of my favorite sayings is sitting on your hands is a great position. Do not.
Well, if you have an edge, we'll press it. But right now it is a lot of digestion. We've had some, individually some good wins and then some frustrations. But the point is we just don't have enough information right now to make a really strong bet on a continued direction without more input. And I don't think that's what we're seeing right now. We've had 3 months of literally chopping sideways. But we will get a chance when you come back from vacation. You're going to be on next week. So no macro to micro options power hour. Next Wednesday, we will reconvene and we'll be through, by the way, the meat of earnings season. And that's going to be great because it is exhausting on top of all the headline risks that we're getting from policy positioning. So this is going to be great. We'll come back in 2 weeks and then hopefully we'll have a smoother look into options expiration in March. So you'll miss the February OPEX.
I am. You're right.
Yeah.
Well, no, I'll be back for the Friday.
Okay, but we'll miss it, in other words, for this call. So anyway, we'll get back together in 2 weeks and wish everyone a great rest of the trading week. Stay safe. Be patient.
Thanks, everyone. Take care. Thanks, Samantha. Bye-bye.
Subscribe to LaDuc Trading YouTube channel for more macro to micro options power hour and other content.